Hi everyone, Donnie Schultz, Embrace Home Loans here with your weekly market update. It's Friday, February 25th, right around 5 o'clock, and we are looking at rates almost in line with what we saw last Friday at the close. We have seen volatility this week. Last week's market update, we talked about the potential short-term float opportunities for buyers because of the Russia-Ukraine headlines. Russia ended up launching a full-scale invasion of Ukraine. We did see rates dip down briefly, and then those gains were given back as we finished up this week. So rates have really gone into a consolidation pattern. We're right in the middle of a channel. If you look at the 10-year Treasury, which is what you would track, for daily rate movement, the ceiling is 2.06. The floor is 1.91. We're closing here at 1.96, kind of right in the middle of this consolidation pattern. And we're going into a weekend where there's a lot of risk for buyers who are floating their interest rates. The underlying condition is for higher rates. When we go back and we talk about the Federal Reserve shifting policy to fight inflation, that is still there. We're coming into the Federal Reserve meeting where they're most likely going to, or they're definitely going to, increase their short-term interest rate. There was some fear that it would be increased by 0.5%. I think that's off the table now with everything that's going on geopolitically. But, there is still going to be an increase. So that underlying condition is still there. The risk is what happens with Russia-Ukraine over the weekend. Markets have really shaken off the invasion that has occurred to this point. If it escalates, we most likely will see rates dip a little bit. Again, the upside for a borrower who is floating through the weekend is maybe an eighth in interest rate. That's what we saw, going into Tuesday, Wednesday when Russia invaded. And again, those gains were quickly given back. The downside is a peace resolution. So I think everybody wants a peace resolution. I don't think anybody is rooting for war. But for a borrower who is floating their interest rate right now, if there is a peace resolution, rates are going to go up, and they're most likely going to be testing the highs that we saw a week and a half ago. That is the most likely scenario. 10 years probably going to go back up to 2.06. And then the question is, does that solidify as a ceiling where rates now pull back, again, short to medium term, or does it go through there and we go to the next leg higher in interest rates? That's definitely a possibility. It's a strong possibility going into the Federal Reserve meeting mid-March. Now, buyers who are not working with lenders who have overnight lock protection, so my bank, Embrace Home Loans, we can lock our loans from Friday pricing up until midnight on Sunday. So a lot of contracts that we've gotten in over the last 2 days, we're saying, hey, let's see what happens over the weekend. If there's any kind of news of a peace treaty, a ceasefire, those rates are locked in. If there's not, well, Monday does bring the possibility that rates could push a little bit lower. We've seen some improvements this afternoon. There's a little bit of wiggle room there for buyers who are floating into Monday if you have that overnight protection. If you don't, I think you have to be locked in today. Just too much risk for you to come in Monday morning and rates to be an eighth higher. So, lock. We've been locked by since the beginning of the year. That's the advice for the clients. If anybody's telling them to float, it's pretty bad advice at this point. Industry news, pretty big one. We have releases from Fannie Mae and Freddie Mac saying that for certain purchase scenarios, they're going to be allowing desktop appraisals. So a desktop appraisal is exactly what it sounds like. There's no property inspection. So instead of an appraiser going out to the home, they're going to complete their report based on the information from the listing and comps. So there won't be any physical property inspection. There won't be pictures of the property or anything like that. We just get a report based on, again, desktop review. So those purchase scenarios, Fannie Mae, Freddie Mac, conventional mortgages, single-family homes, primary residences, 90% loan to value or lower. So borrower has to be putting down at least 10%. Primary residence, single family home. And what will happen is very similar to the appraisal waivers that some of you might have seen, where a lender like us will run the file through the automated underwriting systems and we'll get a finding that says desktop appraisal is allowed on this property. Embrace will be utilizing those as soon as they're available immediately. We're a direct lender for Fannie Mae, Freddie Mac. We don't have to worry about resale to any other lenders, so we're going to go right off their guidelines. If they say we could use a desktop appraisal, we are going to use it. All right, it's going to speed up transactions. It's going to save money. It's going to be more efficient. So we are going to put that in place immediately. Freddie Mac is rolling that out March 6th with their loan prospector update. Fannie Mae is going to be a little bit later. They're March 19th. That's when they're updating their automated underwriting system to give these findings back to lenders. So that's pretty big news. I think we're going to be seeing a lot of them. Again, if the purchase meets the criteria, I think we're going to be seeing a lot of desktop appraisals. So big change. You'll be hearing a lot about it. Any questions, you can reach out to me and my team. Hope everybody has a great weekend. Enjoy your Friday night.